as soon as I turn them on.
Still need some motion in the agenda.
No, we don't,
Oh,
we,
never mind.
yeah, we
Sorry.
can't
Yep.
pass motions at the work session.
Kay, did you want to talk about, it's really loud, about procurement policy?
Well, I don't, we do have the draft. This is updating and
So there,
adding the lease. No, I didn't work on this as much as you
okay,
did.
there are a couple of major changes in this one. One is the authority levels. We're recommending a higher spending limit for department heads than we currently had in the policy. And that is, this is some administrative pieces, but the spending limits are increasing, the request is to increase them because the cost of things of doing business has gone up. So at the old level of $5,000, when the highway department had to replace a garage door and it was $14,000, it requires approval. When we move that number to $25,000 for budgeted items only, right? We're leaving the number where it was for things that are non-budgeted. So that this is very typical of what other counties have already done. It's also correlates to the purchasing policy in the state bid law. Anything under $25,000 can be directly negotiated.
So
It
Jeff-
doesn't happen often. It happens way more in the highway department than anywhere else.
So I have a question, when we're talking about increased levels, so we're at $2,500 for non-budgeted items. Have other counties upped that to like 5,000, do you know, or is it pretty standard at 2,500?
That's a really good question. I'm not, that specific detail I can verify.
Does anybody have thoughts on that? Do you wanna up it, it's at 2,500, or do you wanna leave it at 2,500?
I'd like to see what other counties have, but it seems reasonable, like, like we're discussing where everything's gone up. What do you get for $2,500 now?
Kleenex,
If that.
since everybody's got colds.
I know where these things are, so I can. Yeah, for example, Mille Lacs County has 10,000 for non-budgeted items and 25 for budgeted items.
When you say budgeted items, are you saying a line, like say equipment expenses, that's a budgeted?
Yeah, so
item?
if we've got $300,000 for equipment at the transfer station and they're buying bins, he's bringing bins forward to you every year to buy that, and that's just kind of general routine and built in. You're not approving the line item for bins when you're approving the budget, but you're approving $300,000 to be spent towards equipment of that type. So that would be what we would be talking about.
Okay, and then say he had reached this 300,000 and then he wants to buy another $20,000 worth.
If he exceeds a budgeted allocation, he'd have to come in for approval.
But this would alleviate quite a few things that come before the board currently by raising it to 25,000.
A lot of the stuff, like bins,
Or bud capping, say if it was under 25,000,
yeah.
yeah.
So
Would
that
we still see it on the consent agenda, though? Or not?
you would see it, you would still see it in the bills, in the auditor warrant and the commissioner warrants. You would still see the detail of that, yes. You just wouldn't see them come through as approval items. Now, if it were a situation where the department head still says, well, I'm gonna get bids and I still wanna do a bid form and it's something that we expect to be about $20,000, they still could bring that in to say that we're choosing that, if they want you to confirm the choice of who they're doing business with rather than negotiating it. And it's much more likely this is gonna happen in places like Human Services and Solid Waste and the Highway Department, because they're the ones dealing with major contracts like that. You would still always see the detail in either the weekly auditor warrants or the commissioner warrants bi-weekly.
And with Kay's new format, we would be able to tell exactly what the purchase was in the note section.
And they'll show, when you look at that monthly activity form, they'll show up there too then?
The monthly transactions?
Yeah.
They'd show up in the auditor warrant and the commissioner warrants, and then at the end, in the next month, they'd show up in the transactions, yeah.
Okay.
So this policy, and I'd have to look at it, this is, Mille Lacs has, for whatever reason, has a really good policy on this. Department heads are authorized to make purchases on behalf of the county board without county board approval when the specific approval of the county board is not required by law, when the expense will not exceed the current budget, and the expense is less than $10,000, or the expense is considered normal operating expense items. That's the non-budgeted. Oh, yeah.
So procedurally, at 10,000 or 5,000, so it wouldn't have to come before you or anything, they would just run it through?
They have a secondary thing where the administrator has the authority to approve a higher amount before it comes to the board. I'd probably just move this one to $5,000 for the non-budgeted and leave the $25,000 as the department authority.
Yeah.
Because that will take a lot of the,
And it keeps it clean.
it does keep it clean. Then there's, the way we have our policies written, some of them are kind of rolled into, this is the authority level. This is a piece here, and we'll probably move into, this is probably gonna roll us into item number 2.
I have one question,
Yeah.
just as we're talking about retention here. So I noticed further down there were other retention things. Are all the retention as per state statute?
Yes,
Okay,
yep. It's kind of, they kind of refer back to each other. So the statute requires you to have a retention list, and then we have a retention list, and then we have to,
okay.
the more important thing about records retention is destroying documents at the end of that period. It's even more important than keeping, it's as important as keeping good records.
So the township has to send certain things if they don't want to retain them? Does the county have to send certain things to the state, or do you just retain them?
The policy related to that is if we're intending to destroy records, we're supposed to notify the Historical Society, and they would either take them or recognize that we're destroying records.
Okay,
We have all of the tax books underneath the jail in the basement. Many of them were not destroyed, but damaged in the flood that we had in 17 from a water pipe that busted. And we could take those to the Historical Society. Occasionally, we get public data requests where we have to try and make copies of these great big books. And it's a challenge, but we can do it. $25, and then I think it's $5 a page.
so if you sent those to the state, the chances are they're gonna sit in a box somewhere. And so what would happen if I wanted something and it was at the state? How easy would that be to access?
Those tax documents,
Yeah.
the retention schedule is forever. So
Yeah.
those would be off the table of things we would send to the state.
Okay, so we keep all the forever here.
Yep.
Oh, I
Okay.
thought those could go.
I'm inclined to believe not. Agendas and minutes,
Or
I'm
forever.
guessing
Pardon me.
there's some portion of the tax rolls that are forever.
Okay,
And we just have to look at them again.
okay.
So getting back to my question, hypothetically, if you sent something to the state, I'm guessing it would be months before we would be able to access, just for them to find the documents and then,
But they wouldn't want you to, the state doesn't want you to send anything until you fill out a form and say, these are the records we're intending to destroy. Do you want copies?
oh,
Do you want
destroy, that would be the key word
So
there.
we would,
Okay.
they wouldn't want records that are on the retention schedule to be destroyed unless they are of a historic nature.
Okay,
They wouldn't just be the old operating records. So it's just a little bit, you are supposed to complete a document to say we're intending to destroy records per our records retention schedule, send that to the state. If they don't ask for something, then you can destroy them.
okay.
Yeah, it's complicated. Denise is very, very versed and has a book handy for looking at all those things. And right after the first of the year, we'll be going through and doing another round of that, so.
When we use the docu-shredder, and whenever we put things in our bin that's in our storage unit, I have a clipboard that we write down, just, it's not pretty, but we just write down kind of what it is that we're shredding. And we just keep that right in the storage unit.
So the next part of this is related to, the next part of the procurement policy is related to contracts over $25,000. And we learned this in a couple of different ways this year. We had conversation with the audit team about the contract for doing the roof on the old courthouse. And we had conversations about the purchasing of new, the servers that Fred brought forward and said, hey, we got these, they have these available at a discount. We should get them. We missed steps in the process with each of those things. And the next item, the review, the draft contract checklist, is something that Denise put together based on documentation that we got from our audit team lead, Larry. And he's had a chance to review it, and of course he says, well, that's good for this year's rules, but it has to evolve every year as the rules evolve. And I used to, auditors are on my list of people that are difficult to work with, not you. Those audit professionals.
Thanks for that clarification.
Not you, but boy, I tell you what, they even if you're doing everything right, they can still go to their back pocket and find a whole list of things that are just obscure that nobody can ever
Well, I
meet the
get
conditions.
emails every day.
Yep.
Maybe it's right.
It depends.
Yeah.
It always
Favorite word.
does. So there are two elements of this that we haven't had before. Our previous expectation based on this policy was the department heads would maintain the records, the procurement records and the contract and the RFP and all the records related to a project in their own department and have those available when it came time for audit. Well, as I was talking with Larry, he said best practice is that either the finance office or the administrator office would keep those records for everybody except the highway department because they just handle their own and they deal with it a lot and they're good at it. So this is kind of a change, is that the administrator's office will maintain a list of the contracts that we have in those folders. The auditor will know which ones those are, and when the audit team comes in to say, we need the records related to this project, we ought to be able to just pull files. Do you want to talk a little bit about the items on this checklist, Denise?
Yeah. What I did when I went through to create that checklist was, they have a whole list of questions that they ask. They have a file and they say, did they accomplish this? Yes, no, and then on down the line. So the checklist is kind of just bullet points to prompt myself or whoever is working with the checklist to, do you have the appropriate board minutes? Do you have, do they show the project was awarded? And so on. You can see as they're all grouped, whether it's 175,000 and over or 25,000 to 175, the less than 25,000, and then the sale of real property, which we're also putting into use this year as well. So that's how the checklist was developed, was with that in mind, so that we had the documents that they were questioning, not on site, but was it Ellers? I forget
Yeah,
the
and not all
names.
in one place. So
Correct.
it's always kind of
here, some there.
a word find to find all the documents they're requesting. So the intention is to create either a physical or a virtual file for every one of these.
And then it is we've actually put it temporarily, it's not been approved or anything, but I've been using this twice now. Once with the parcel purchase that we have in the works, and I've also been putting it into place with the jail remodel project. And I've already found ways that it needs to be adjusted, so it will be a work in progress as it gets used. But it's really it's proving to be a good tool.
So the sale of real property, does that include the tax forfeited land?
Mhm.
So do you need something in here to document, with this new set of rules? I can't remember what year it is. A checkbox.
The
so-
2016 look back, yeah.
Yeah,
That's a good,
Yeah, very, very likely. Probably not here. Between Corey and Kay, they
Yeah.
will have to document
okay,
whether that is subject to the settlement or not subject to the settlement. So I think this checklist will just stick to the 37301.
Okay.
But that's a good question. We had some frantic conversations on Friday about tax forfeited parcels and whether they were subject to those new requirements. And in the end, the parcels that the city of Park Rapids had withheld, they are going to let go to the sale
oh, they are, okay.
because they are all subject to the look back. And they'll be listed for market price, plus the fees, plus the specials. And whatever doesn't sell, then we can have a different conversation about transferring those to the city they're not interested in paying the retail price for those parcels anyway, so.
Could they bid if they wanted the
Yes,
property?
yep, if a public entity can bid against other interests at an open auction,
Okay,
yep.
thank you.
So, one thing that I would note relative to the courthouse, the reason that we got dinged is we were working with a consultant, right? And the consultant did all the bidding for us and all the bid reviews and summarized that and brought that all to us. And there was one piece of paperwork, and
the payroll.
no, it wasn't the payroll. We had all the payroll stuff. It was a certified that they were an authorized bidder or that they were, a certified bidder with the state. I can't remember exact term for the, but it was just one form, right? We had all the documentation around it that said we had the insurance and the bond and the qualified contractor. There's a specific form for a qualified contractor that kind of summarizes the other 25 things that we have to have on file relative to that. And we didn't do it because the McDonald and Mack was doing this process for us, and we were just bringing the elements to the board. So we learned that even when we have an architect or a contractor or a construction manager, that we still have to be diligent relative to that paperwork. That being said, what I've done now is shared this with ICS and their staff and said, okay, here's what I'm gonna need to have in my file when it comes time for the audit. And he says, yes, we got this and this and this. I'm like, that's fine, that's good. I assumed you would. But I'm just telling you that when we enter into a contract and have an agreement for somebody to manage contracts for us, that we're still responsible for all the data. So there's a reason to get this cleaned up because we're gonna get modest marks, notes in the file that said this and this and this, which we always do. They're not consequential. They don't affect anything. They don't affect the fact that it's a qualified audit report, or it's not a qualified audit report. But it's just better ways of doing documentation. And when we centralize that, when the audit team comes here, they won't have to go to that office and this office and this office. They'll have to go to the highway department and stay in this building, right? So I think that will be good. And as Denise mentioned, this is gonna be a moving target, but it's good to at least have that. So physically, put this on the inside cover of the file, and you check it when you put the paper in there. And electronically, you can do it the same way. But I think this is gonna, eventually, if we get good at this, it could reduce our audit costs, if they have to spend less time doing those searches. The other piece of this, we're gonna centralize this, but we also talked about training and making sure that all the department heads are trained and they understand these policies. And that's not something we've specifically made time for, but it's something we need to make sure that we're doing. So we'll be bringing these, after the board approves them, one at a time to the department head meeting, and making them available and just walking through them. In that sense, having an audit team like we do, that's kind of persnickety, is good, because everybody will be current when we get through it.
When the auditors are here, and would we show them this list and maybe they could add to it?
They, you know, the nice thing right now is that we have a conversation back and forth. When we get new direction, if the rules change, we'll get new direction, we can update this. They're more than happy to review our internal controls, even these just checklists and policies. So I think that we have a good relationship with that team. It's a new team this year, that's why I think it was a much steeper learning curve. And they didn't assume anything like a team that had worked with us for several years did. You know, they already knew a lot of that stuff.
Speaking of the audit, are we gonna do any RFPs?
We've
'Cause
talked
we've
about
done-
that.
We've stayed with the state now for a long time.
We have, and this is 2024. We would have had to have notified them, is it even years or odd years?
I can't remember.
By August, if we were going to go out for a new team, and I think we talked about that, and we decided we would stay with them for another 2 years.
Okay,
But we certainly can have that discussion.
Yeah, one thing that I'd like for us to be able to do is internally have the capacity to run some of our own financial reports. And we have a little bit of cleanup to do in IFS before we would be able to use the tools to do that. If we were able to run our own financial reports and we have these other systems and controls in place, we would very likely get a more competitive bid by going out for bid than we currently would. And a big part of the challenge, I always think when we're on video if I should say this or not, a big part of the challenge is if we went out to RFP, I don't know that the state would be interested in us. Right now, they're overloaded with the number of contracts that they have. And if we don't have those other things in place, I don't know that we wouldn't pay more. So our internal conversations have said, let's try to address a couple of these things in the next 2 years, and then it will be time to ask the question of should we be doing something else?
Well, I remember in the past, I don't remember which counties it involved, but I believe Hubbard County was one, and like I say, we weren't the only county that had hired an auditing firm, and then it ended up, it wasn't, whatever, I don't remember, it wasn't done properly or something. So then we, in a sense, we paid for them, and then we paid the state again to come in and redo everything.
Yeah, we don't want to do that.
That was mandated in 2016,
Okay,
that our audit had to be done twice, and that was because we had Hoffman et al.
Yeah.
And, yeah, there was 7 other counties, as I recall.
okay.
So it's a very thorough RFP process if you want to change auditing firms.
Okay.
do you know how many counties are using the state for auditors?
Honestly, at this point, I think it's less than half, but that's just a feeling I have from knowing counties that aren't. And was it 2016 or 2017 when several counties almost came to the point of taking legal action, saying we have the ability to go and have somebody else do this if they meet the criteria. So I know that a bunch of people went away from the state at that point. And eventually, it might get to the point where the state isn't gonna do audits, that they may just audit the audits and document the paperwork as it's coming in. And I don't know that that's gonna save any of us any money in the long run. We're still paying for those executive office services of the auditing,
Yeah.
the auditor's office, and we'll be paying somebody else to do the audit to prepare it, so.
I know some of the boards in that I'm on struggle to find auditors.
Right.
if the state gets out of it, I'm assuming then it would be,
It'll be a challenge, and it'll be another one of those market things where then people can say, the demand is high, we can raise our prices. But we have some work to do internally before we would be at the point of saying, we think we should look for options. Generally, and so format-wise, what we'll do is we'll bring these, we'll read through these, we'll double-check them, make sure that everything's correct. We'll offer a redlined and a clean version before we bring it, and a good summary of all the changes in there. You know, these, as I mentioned, I just kind of glossed over, these are administrative, these are just statutory, these are the substantive changes. We'll provide a one-page cover sheet for each one of these, and we're not gonna bring them to you 9 at a time for approval. We'll bring them 1 or 2, but our goal is to get them done before the end of the year so that they're in place for our next season. Any questions before we move on to the next two? And the next two I'm gonna leave to Kay.
Thanks for your attention to detail, Denise.
You're welcome.
Actually, I have not made any adjustments to the investment policy, so
Okay.
any made would be yours.
I don't know that we've had any
Oh.
specific relative to this.
In fact, I have not even reviewed this one because it's probably more recent. Let's see, it's from 2023, so it's,
So this is the 2017, and we have a 2023 policy, which we did do.
I just
Yeah.
have one question on page 6 on commercial paper. So, you know, Magic Fund handles the investment in commercial paper, and I'm assuming when we go to other places, that they handle that investment? You don't ever just invest in commercial paper on your
No.
own, so do we need that in there? That number C?
And I apologize. We made a list of all these things. This is the one that needs more attention, and it needs
Okay.
less attention because we have a current 2023.
Okay,
So we'll take a look. I don't know if it's in the 23 or if it can be eliminated, but
okay.
this is one that's, I believe we did this in 2023, just after we signed up with Ellers, didn't we?
yeah, I think so. Tom signed it when he was board chair,
Okay.
February 21, 23.
Yeah, because the one we have is signed by Vern.
This one says 2017, so
Yeah.
Oh,
this is a laundry list of all the policies that, that the auditors are looking at when they're on site.
Okay.
I had one question on page 7, it said certain mutual funds, what does that include, or what kind of mutual funds?
so you're looking at the 2017 policy, and
Oh, that's the old
I
one?
think
Yeah,
that
this
has
is-
been taken out.
This is the old one, so we will, when we bring this one forward, well, if it was approved in 2023, we might not need to bring this one forward, but we'll answer the questions about those certain papers and certain funds.
Oh, that's the only one that I saw with the agenda. Okay.
Yes, it is. And as I mentioned, it's a laundry list of everything we need to get through. Certain of them we put more work into the procurement and the checklist. And we have some general recommendations about some of the others. So we'll have to review that one, but if it was just done in 23, we might not need to do anything with it. So, one of the items that came up, and I don't know that we need to do anything with the fund balance policy, but the one consideration that came up while we were going through the bond rating for the debt issuance is the types of funds that we are including in our available fund balance. And I know you remember that conversation.
Yeah, well, our fund balance is made up as per statute. We have the non-spendable, restricted, committed, and Is this the 2019?
This is the
Yeah.
2019.
Okay.
Yep.
So that's per guideline, per GASB 54, and our audit guidelines as well. So, and then we have assigned and unassigned. So they have changed between the years because there used to be unrestricted, and I believe that's now unassigned.
Yep. But when we were reporting our available fund balances and the rating company was looking at our available fund balances, there was an issue when we were, I think, counting unassigned, assigned, and committed as being available, because those are all categories where you could make a decision that we're gonna use that money for something else.
Yes, and
As
so
a-
when I, pardon
Yep.
me, when I used to give reports, keeping in the guidelines of 30 to 50%, I was using the whole fund balance and not subtracting the restricted, committed, non-spendable. I didn't realize that had to be taken out. So if we had a very healthy fund balance, it was because it was the complete fund balance.
Yep. So we have to make sure that our policy and your intentions relative to the fund balance policy are using the right assignments of these 5 types of designations for funds. And we got hung up on that, but when we were able to walk through that and worked with the rating agency to come to an understanding on that. But it does mean that we're gonna be reporting our fund balances differently than we have in the past, and that we're gonna have to probably make some changes to this policy to identify how we're reporting our fund balance.
This goes back to the way that our reports are made out of IFS, because when we look at fund balance, the reports consolidate everything into one line. So it's not clear on a monthly basis what the designations are between the non-spendable, restricted, committed, unassigned, assigned.
And that's
Um,
some
and
of the work we have to do
That's
in
the
the
mapping of our.
mapping of funds and back
Internal
of the
funds.
house. So we're only bringing this up because when we talk about the county has really healthy fund balances, we do, but they're not as healthy. The available fund balance is not as much as we had thought it was. It's still sufficient, and it's still largely meeting our minimum balance requirements, except in those 2 areas where we talked about in human services, and I think we're getting close on solid waste, but I think we're gonna be okay this year. So that's the intention here, is to make sure that we clarify these fund balance categories, and that we're reporting them to you in the same way that our policy says we're reporting them when the audit teams come through and when the rating agencies take a look at it. You'll still get a list. I mean, if we have non-spendable and restricted fund balance, you'll get that. It'll just be in a different report.
I do give you that monthly, mostly monthly, on the cash balance report for the general fund. It shows, what our cash is, and then we have the committed and the restricted, and here's everything that's left. And so that gives you the exact amount of what's left after committed restricted. It's just not as a percentage of fund balance. I could add that line. That would be really easy.
Yeah, we'll just talk through the procedure and bring it back, but that's the issue that we identified, and that's why it's important for us to make sure this is clear to you and to the public and to the people that are auditing our work.
I noticed the state of Minnesota paperwork that was directly after this. And it's kind of funny because it says it's a new look to fund balance, but yet it's from January, February of 2011, 13 years ago. So I'm wondering if the state has updated anything.
We will look at that. They're always updating these GASB policies.
Yeah.
But I think that these rules in here generally work.
Okay.
And again, they're clarifying the restricted, the committed, assigned and unassigned. And I think this was the most recent report that they had on this, but we'll take a look and see if they have an update. Might even just call down there and
Sure.
check in with somebody, but
I
Larry
thought,
Moe
oh,
would tell you.
Was the grant, was that in the, what policy was that when it talked about grants and then not using grant dollars to hire a new employee? Was that in the first policy? My question is, can we, so if we receive a grant at the county level, is a lot of grants allow up to 10% for administrative? Does that apply to counties and grants?
In many cases, yeah. So you're
Okay.
thinking about the Heartland Lakes when they get
Yeah,
and they
yeah.
have a 10% fee. Yeah, we typically have the same amount when we apply for some of those grants.
Okay.
But if you're thinking about block grants that come in for human services, they don't. They're applied differently.
Okay.
So, and I'm trying to think. So, I mean, the grant that we got for the roof renovation had a portion that was available for administration, but that covered the cost of the architect that we hired to do that for us, almost.
Well, solid waste has gotten some grants that they used for hiring.
Yeah, and I'll have to check and make sure that we're documenting and doing that, because if you get a grant for $1 million and you get 10%, you get $100,000. Well, we should be assigning that against some of our general fund expenses, or you could make the decision to allocate it all to the project because you're already paying for the staff. But you should know how we're gonna spend those things when those situations come up. So I'll talk with Josh about those two items.
Yeah,
Go
because
ahead,
it,
Gina.
Yeah, the other one that I recall that's and we have it labeled out on our org chart, is like the sheriff's department of deputy sheriff, there is one that is allocated.
Oh,
to
yes,
DWI.
and we approved that grant. Yeah.
A grant like that. Off the top of my head, I can't think of anything with solid waste.
well, I thought it was like with the organics program or something,
That one
where we
could be
hired
right.
an
I think you're
summer
right, Ted.
intern or whatever.
The outreach.
Which is, yeah,
specialist.
but those are kind of, that grant was specifically to do that. So then, of course, we would spend that to do that.
One of the counties yesterday at MRC shared that they had been tracking, you know, because Brian says a lot of social services positions end up being paid for, the majority of it because of how the reimbursement rate comes. I can't remember which county it was actually laying off 2 people because it was costing the county more money than they had anticipated from what they were receiving in reimbursements. I'm assuming we're tracking that.
Yeah, the right number of staff to caseload. The caseload number is really the balancing point. When I was in Cook County, we had 16 employees in social services. When I left, they had 26, and it took fewer levy dollars to support 26 than it did 16 because they had enough people, they finally had enough people for the right balance of caseload.
Sure.
So that's always in balance. The challenge is, I think you've all heard, as the intended mandates coming down and program changes in human services are gonna drive up the cost, which is gonna drive down the billable reimbursable hours. And that, I mean, some people are talking about doubling the amount of time that it takes to do things. And that's really scary. But
Yes, and it's not spending, it's not doubling spending time with the client, it's doubling
processing time.
processing.
Yep, processing time. We're not doing any better by any of the clients. We're doing more paperwork for St. Paul.
That would be tracked by human services.
Yeah, that's- yeah.
Caseload
Yep.
tracking.
So the one item that Gina brought up is the one position where you have put a condition on that position saying that we're only gonna have that position as long as we have the grant. We have not taken that action relative to some of the other positions that are primarily grant funded. I think there's a presumption, but as far as I can recall, that's the only one where you made the motion to accept the grant and the position only lasts as long as the grant does.
So do we need to reword that? The wording in that policy? I'll see if I can find it.
I don't think we do, because you always have to comply, and then you can put your own conditions on it.
Okay.
So I don't know that.
It's under B, it's on page 8, under, actually, county administrator on the first policy.
On what,
On procurement, if you go to page 8, and it's under the heading of department head or designee.
Are you looking on page 8 of the document or
Oh,
page
wow.
8 in the file?
I'm looking on page, oh, no, I'm sorry, page 8 of 25, page 6 of the document. At the very top. There you go.
And that's a really good one to clarify in this policy.
Okay,
And sometimes they're not full-time either.
right, yeah.
And we have to generalize it.
Uh, 4B. All right, we'll take a look at that one.
Okay.
Well, I mean, kind of, we're not increased, so like what we have is whatever, there's 14 deputy sheriffs that we have listed out, and then we have one deputy sheriff DWI grant. So we did increase that 14,
But we did in solid waste.
and I'll check that one.
Is
Yeah,
that
just to
the
clarify the
SCORE
wording.
grant?
I don't,
That's what
I
you're
don't
referring
remember
to.
if it was a SCORE grant.
Yeah, I don't remember exactly
Well-
either.
We'll double check this.
Yeah.
This is not, again, this one is, we've hit the highlights of what we know we need to change or recommend we can change, and these are really good catches that we should consider because they're just internal portions of the policy, whether that's what the board wishes on this or not. And that, basically, what this is saying is it's providing direction for the department head on how much information you need before you can make a decision to accept a grant. We may have a little more work to do on these than, some of these than I thought, but that's good.
Well, and I agree with Ted. I mean, we accepted the grant knowing we were specifically hiring that per, it's not that we can't use grant dollars, but it should be worded in here,
Grant dollars are not
Appropriately.
usually free.
yeah.
Yeah, because I agree, once the grant is gone,
Yeah, the position is
yeah.
handy,
Unless, of course, then we decide we want that
Right.
position,
Yep,
yeah,
yep. But that, it shouldn't be created and then just linger.
Yeah,
yeah.
thank you.
Capital asset policy, and this, our GASB 34 policy is more than that. But as we're implementing new capital asset tracking software, and as we look around and we see tags on a lot of things that don't really have that much value, and I
Tables,
and I asked Larry, I said, Larry, do we have to track this stuff? And he said, no, you don't have to account for anything that didn't cost over $5,000. So the primary change in here is to move the needle on what it is that we're gonna track for capital assets, generally to $5,000. Now, summarily, when we purchase new equipment or purchase new office furnishings for downstairs, we can identify that we spent X number of dollars on office equipment without identifying all the tables, right? That we have this much, when you do a personal inventory at home, you know, you inventory everything that has a motor, right? And then you generally have a blanket for a certain amount of personal property. When you do your insurance, you don't itemize, you itemize certain things if you want to make sure that they are specifically covered, but generally you get a blanket for your personal belongings. I think the one that drove me over the top when I got here is there was a asset tag on a stapler. Like we're not,
Here.
and every year, because, no, it wasn't Kay, because Kay staff is doing what they're supposed to be doing, we get this list of capital assets, and everybody's tracking down and looking for tables and file cabinets and all this stuff, and I'm just like, we are spending way too much time on something that is serving no purpose. So, well, last time those lists came out, I said, we're not doing that anymore. Larry said, we don't have to. We're gonna do this. That means we have to approve this policy, and generally, it just means we're moving that limit up. The specific exclusion, or exception to that is all the electronic devices that you see, do have to be inventoried individually. But we don't have to put a tag on them because they all already have serial numbers. So what Fred is doing relative to inventorying all the PC and PC equipment and network equipment that we have, he'll always be keeping that and be able to respond to the state and be accountable to the state relative to that.
That same report also goes to MCIT every year.
Yep,
Yeah, that makes sense.
yep. But neither MCIT or the state care about
No.
how many tables or chairs we have.
You're talking about like this little tag?
That little tag. And we have to inventory that as a PC.
Sure.
But we don't need a tag on it because it already has a serial number, right? It has an identifying character. So within a database, you can uniquely identify that piece as separate from anything else because it's already got that information in it. So yes, we will not be putting tags on things less than $5,000. And things over $5,000 typically don't have to tag anyway because they already have their own serial number on it. So but implementing the new capital asset software and going through and cleaning up this portion of the policy, and I'm not specifically prepared to talk about the rest of this GASB 34 policy, but I just wanted to identify that big piece that says, we're not gonna track tables and chairs, we're gonna track things over $5,000, consistent with auditors' recommendations and compliant with whatever MCIT needs to do the best they can for us.
So on page 6?
6 of 10 or page
Yeah,
6?
6 of 10.
Okay.
Vacation and sick leave needs to be updated.
Yes, it does. Yep, we've already got a note that says that needs to be
Okay.
dealt with.
But this is, can you scroll up just a little bit? Yep, that was, the sick leave is, vacation and sick leave, now PTO, are tracked for compensated absences, which is an audit number we need to accrue at the end of the year.
Oh,
How
so you
much-
still
how
need
much
the
does
labels?
Yeah, but it does need to be updated because as a general rule, we don't have vacation. You know,
Yeah,
it's
that's
now
what I meant,
PTO.
yeah.
So, yeah, I have a version that I've gone through and started updating.
Okay.
And so, yes, that is part of it. I don't know if you have,
We
That
don't,
version.
as I mentioned, the piece, this GASB 34 policy, how far we've gotten is changing this level of assets to $5,000, and we haven't gone through the rest of it.
Okay.
And we know we need to before we can bring that policy forward. And that's the key piece.
I have reviewed several other county versions, and they're kind of all over the place because GASB 34 does really have a wide range of items that they're addressing here. I think for my purposes, I really wanted to address the capital assets policy. And, yeah, it does need a lot of updates. I mean, this is from 2003.
So we'll also, we're gonna interpret the GASB policy, but we're also gonna include a copy of that, so those of you that wanna really dig in and look at it can see that our work is consistent with what the request is. And if you wanna read through GASB 34 requirements,
I kind of like Mille Lacs County, I kind of like how they put, they have actual boxes, and then they put the information. It's easy to read that way.
and see, they've separated out their capital assets policy from the GASB 34. So their GASB 34 is a volume of chapters.
Okay.
And maybe that's the way we wanna do it.
I like that version.
Yeah, it's really easy just to
This is from
zero in on.
2017, so I'm trying to think who was there at that point in time, but this is very clean regarding the capital asset policy. It's not comprehensive relative to GASB 34.
Yeah.
What's your opinion on the last paragraph of Mille Lacs?
I would probably word that differently because we're using capital asset tracking software.
However,
Yeah,
excuse me, we do send out a form, supposedly every year. We're behind, we're waiting for the new implementation, but we send out a form for each department to complete, letting us know what they've disposed and what they've added. We also pair that with the equipment additions out of IFS to try to get everything completed, but we do send out a form.
So I wouldn't read exactly like this. It would say that a list of capital assets is maintained by the county, whether that, probably in the auditor's office, but department heads are expected to keep that list up to date on an annual basis through this process. Getting at the same thing, but we don't want 12 different lists. We bought a new software program so that we can have one list, but every department head's still gonna be responsible for identifying this was destroyed, this was sold, this was purchased. Because the auditor's office wouldn't know all of that.
Yeah, because even if the asset's under $5,000, it all adds up.
Yeah.
Yes.
We,
Still got to keep track of it.
In our disposition
Don't have to
policy,
tag it.
our disposition policy does not say we don't have to track what we dispose of under 5,000. We still will have to do that. We just don't have to individually inventory it.
Yeah.
as Jeff found that out, we were keeping the 5,000 over capital assets, and we also had our own 5,000 and under, which we've now done away with, thus freeing up a lot of time for my staff to do their own jobs and work on things like elections, and it was quite a load off of their backs too. I mean, they were really thankful they didn't have to add that, because being so far behind and then trying to play catch up.
So, you know, getting back to the stapler, if I'm a department head and I threw a stapler because it doesn't work anymore, I don't have to, no, you're just talking about even big items under 5,000.
Major things, yeah,
Yeah.
major things. So, for example, the intention is to replace a lot of the office furniture on the second floor when we do the remodel. And we will identify that we disposed of a certain amount of office furniture during the remodel and purchase new. But we won't track each individual piece. We'll just have this much money of new office furniture. We can't dispose of anything without tracking it. If we sell it at auction, if we sell it through some other means, if we destroy it, it's all supposed to be documented, right?
So for, like MCTI purposes, say you had a fire and all the office equipment was destroyed on the third floor, you have a figure though for that third
Yes,
floor? Okay.
yep. And generally, they're offering coverage much the same as your homeowner's insurance does, that you typically get. I mean, if you've got a $500,000 house, you're gonna have $100,000, $200,000 worth of personal effects, right? The insurance company's not gonna ask you to list those individually. They're gonna give you up to that to replace those personal belongings, right? So furniture, clothing, et cetera. If you get a loss, you're gonna be able to spend up to that much to do it. If you have itemized things, jewelry, other stuff, you would list those individually so that they could be individually valued and covered. But tables and chairs are just gonna fall under that general list. Write-off policy. Here are samples from other counties. You have a hard copy of a draft. Okay, I'm gonna let you talk about that one.
We have not had a write-off policy before, so this is the first draft. Can you pull up our draft? Or do you all have a hard copy? Okay. So this, Denise and I worked on this, and gleaming off of, other counties, St. Louis and Okoskot, Minneapolis, we kind of took the best of theirs and applied it to what works in Hubbard County and our processes, and this is what we've come up with. We have to abide by also the audit requirements, and our auditors review write-offs each year, mainly in social services, solid waste, and TFL, tax forfeited land.
So can you talk about the outstanding bad debt list for solid waste? I think Josh has talked about it generally.
Yeah, I
We've got-
haven't actually seen it because
We've
he-
got tens of thousands of
presents it to
dollars
the
of bad
auditors.
debt that we've been carrying for 6 or 8 years. That is just creates, it's uncollectible. And it's just more administrative work every year that we don't take care of it. So we haven't been able to take care of it because we haven't had a policy. It's obviously incidental to that. Obviously, we're gonna expend every effort possible to collect on these debts. But there are certain times when it costs less to write it off than it does to carry it, from an auditing standpoint.
So obviously I haven't read this, but just scanning it. So, would we have a dollar limit before it would have to come to the board to write off? Or are you just assuming that each department head could make their own decision, or?
I actually haven't gotten that far.
Okay.
We just, I think Denise and I talked about that a little bit.
It's in the
um,
last
but-
Um,
paragraph.
Is it?
But, well, it's got $5. So that really wouldn't apply to solid waste or social services or tax forfeited. That is more for tax payments, so we do have a tolerance level of $5. Unless their tax statement to begin with is less. We do have some property that's, they have $4 for their vacant land. We won't write that off because that's the amount that's due.
Well, I'm thinking of other boards, Amanda, and I don't know about you guys, but
There's-
the write-offs always come before the board.
There's gonna be a piece of the process where the board is approving write-offs. And, it'll very likely be something on a consent agenda when we get this
Yes,
policy to the
yep.
point that you approve it. And then there's a situation where we go, I wanna talk about that, and then we talk about it. But it's very likely gonna be a consent item. I was on the board at Monoman County, they have the hospital, not just the nursing home. And the bad debt write-off for the hospital was 6 figures a month. And there was really nothing that could be done. I mean, it was a part of the process, and it was difficult. We don't have that, but we will make sure that this policy includes that portion where it's approved by the board, even if it's by,
And this last paragraph, we should clarify that really refers to tax payments.
okay. All right, that last paragraph is tax payments only, and that should be clarified, yeah.
Yeah, I mean, it does talk about property taxes, but maybe we could start out saying, right in the first sentence. And that should probably be the county treasurer then, because that falls under the guise of treasury. Just a
Okay.
side note.
Do you need anything in here, like, if the county's in error, that we would consider writing it off?
Are you talking, are
Like
you
if we're in
referring?
error in something and there's penalties and interest that pile up, and we find
Oh.
out that we're in error.
That
That's a good
is
point.
per statute, and we do correct. We do work with the taxpayer.
Probably not in debt write-off. Maybe. We'll
think
look
it's-
through these other things.
I want to say statute 283, but I could be wrong.
Maybe that should be referenced in this, is,
We'll look at it. I'll review the statute
far
and review
as-
these other counties.
Yeah, as far as property tax, in my mind, this was more of an accounts receivable, so we should really have a new heading for that last, where we talk about property taxes. Because,
We'll have to
yeah,
we'll have
accounts
to clarify
receivable,
what's, yeah.
two different, totally different items.
That was a good point to bring up, David. Can you refresh my memory, Kay? When people, we had that property tax debacle and then people requested a refund, and they were upset that they had to file paperwork.
This is from last year.
Yeah, but I believe that was, the state required the paperwork, right? That
The
wasn't
state
us.
does require the
Yeah,
paperwork.
so that was out of our control.
They required the paperwork on both the taxes and on the valuation adjustment.
Yeah, okay.
And that fell under the abatement policy, which we do
Okay.
have.
Okay.
Oh, I bet that's where our, let's see, we don't have that one on the list. That was revised last in 2018.
Yeah, that
Yeah.
one's probably current enough. We'll review it. I'm gonna skip to 1.8, because I think, Gina, you're here for 1.7. But if we get through 1.8, we can probably let Kay off the hook. And this was submitted by you, right? Just to increase the,
It
proposal to
was.
increase the spending limit, the standard spending limit on credit cards?
Yeah.
Which was 1,500. So when I got here, I don't know if you know the history, but I recall it was either $600 or $800. So it's now 25,000. But, yeah, and that's 1,500. Most of our credit cards that we have, they're all through Citizens National Bank. And for the most part, they start out with the standard 3,000. Now, I think, is it the administrator and IT have 5,000?
Maybe a couple in the highway department as well.
Oh, I think Jed had a 5,000. So Andrea should now have a 5,000, and we do track who has a card and what their limit is. So this would be to simply increase it to the 3,000,
The base limit, yep.
the base limit, unless we're to the point where even the base limit should be increased. Occasionally, we do have problems where we need to make a payment because the credit limit will be over, and we handle that. And it is on the responsibility of each department head to track what their card has.
So could you give us an example of when 3,000 wouldn't be enough?
I can give you one. Well,
Yeah.
The administrator one is higher because oftentimes we're making reservations
Yes.
for more than one person. And, if it's $250, $300 a night for 3 nights, you exceed $3,000 quickly. That's one reason why the administrator one is higher, because it's used for reservations for the up to the minimum is kind of because that's the minimum they're issuing credit cards for. How often do people, they're not using credit cards to purchase very much, because we usually have vendor relationships and accounts.
We do, and our Amazon they invoice us, which is really nice. So credit cards generally aren't purchasing from Amazon, which has helped immensely. There might be 1 or 2 cards that exceed the limit per year, but when they do, I mean, Skylar's scrambling to get that payment in. Well, maybe that's a non-issue. I just threw it out there just to see if you had an opinion. The other thing that we deal with, I guess, would be sales tax and mainly timely turning in of the invoices so that we get them paid before the due date. We don't want finance charges or late fees. And so we're
But that's not
very
up to the
careful.
board,
No, but if that was, we do have in the policy some teeth, but we really don't enforce it
Does
much.
the policy reference the Minnesota statute that says that we get 35 days no matter what the vendors say?
Oh, I don't think so.
State statute says counties get
Yes,
35 days statement notice before they're due. And sometimes you have to push back on people. And sometimes we accommodate it through our auditor warrants by paying the regular bills, et cetera. We had, when we went with Enterprise, when I was in Monoman, their WEX payment gave us 20 days notice, and they kept giving us fees. And I pull up a copy of the statute, and I said, well, here's the deal. You can either change your contract with us to match what the state statute is, or I'll tell everybody in the state of Minnesota they have to stop doing business with you.
Was that Fleet? You've talked to Fleet for us.
Yeah.
As well.
Yep.
It's still the 20th of every
I
month.
know.
We work really hard to
But we
never
didn't pay
be
any
late.
more, overdraft, or over late fees. But I don't think most people know that that's in the statute, that municipalities get 35 days. And I think it even goes on to say that townships that don't meet monthly have 60 days.
We've got a couple of those in Hubbard County.
There are a couple of townships that meet bi-monthly, yep.
Crap.
Yeah.
Okay.
So, we're just identifying that administratively, this probably needs some changes, and we'll review that, redline it, and bring it forward.
And I could see the $3,000 increase. Like I say, if that's what they're issuing them to.
Yeah, the standard credit limit is now 3,000 unless otherwise specified, and those would be, you know, administrator and
And those
maybe
would be.
Bobby, maintenance, maybe, IT.
Potentially, Bobby, yeah. Bobby and maintenance and IT oftentimes have things that they have to purchase locally.
And, yeah, Andrea. But that's about it.
Okay? I think we can release you,
Oh,
because we're
I've
gonna,
got ballots to get out.
I know you do, so we're gonna have Gina talk about.
Thank you.
Thank you,
and-
Kim.
I know you're just here to, well, so this was just identified as generally something to be on the list for updating. I don't even know what, Denise, what have we updated on this one?
On the code of conduct, I have not updated any of those
Okay.
documents that are attached.
So this came up again simply because the audit team was asking for our conflict of interest policy, and we presented it, and I think they identified that it had been a while since it's been updated. So, I don't know, although,
Denise, was this the one, the new draft from another county or state auditor, or where did that one come from?
The section 21,
No,
or the
no,
other,
the other.
this is what I found in a search of our file managers. I don't know that this policy is in place anywhere.
we'll have to identify the date.
So, and it's been a couple of weeks since I've gone through it to refresh my memory right now, but I think when I went through a lot of the content, because we currently have in section 21 of the personnel policy, conflicts of interest. So a lot of the information within that policy is referenced in this updated draft. We also have the personnel policy in addendum 3 about the American Society for Public Administration Code of Ethics and Implementation Guidelines. You know, I don't know that we need that any longer. If it's a discussion, if we want it referenced, we can, you know, we can discuss that. But I think, you know, when I read through the draft one of the update, I just made some housekeeping notations to it. But we can go back through it again, and then my question is like, where are these new procedure policies that you're talking here and as an agenda going to be housed? And then they'll just be removed from the personnel policy and be housed there, or that'll be decisions to be made?
Yeah, and I think we just kick this one over to Personnel Committee, and do some work and bring it back there again before we deal with that. That's the only one I would pull out of the track of just working it through until it's ready to come to the board. It probably needs some, it ties to a bunch of different things.
If there's a revision, does everybody have to redo a financial statement 90 days after approval of a revision?
Which section is that, Tom?
Section 5.
The code of ethics.
Disclosure of financial interest?
That, we have to review that, because I wouldn't want, would we want our policy to be more strict than the state policy? I think we just want to match it here. So, I don't know.
I believe there were signatures obtained from prior commissioners. I don't know if existing Commissioner Shar, do you remember signing something like that when Deb Thompson was here?
I think I did.
Yeah.
Yeah, I did
Yeah,
at
okay.
the beginning, yeah.
So whether that just needs to be reviewed and where those are at, and if we have those up to date
And
as well.
where's the appropriate place for that comment to be?
Right. And documented.
And then we have a form with the state that we have to fill out.
That's separate from this one, right?
Yeah, that might be the disclosure, like the,
Yeah,
how much you paid in
Campaign.
campaign finance,
Yeah.
which would be separate from disclosure of financial interests,
okay.
hopefully.
I seem to remember signing something disclosure,
Ah.
financial interest as well.
We'll have to run this one through because it's a little bigger than that, but it's on the list because it was identified. I remember Larry asking the question about our conflict of interest policy and where that was. And we pulled that into this section 21 and didn't have a comprehensive policy on the books that we could identify. So we're not sure if that's sufficient or not, but they will always push us to do better.
So before we move on to the next policy, Gina, I don't know if you're gonna stay for that one, but I have a question for you that came up at MRC yesterday. First of all, I suggested to a commissioner that they're looking at doing a wage study to contact you about why we went with a professional firm. But one county, in their child protective services, have all their employees out on FMLA except for 2. And so just a brief conversation of, I mean, we just can't get the work done. My question to you is, wasn't there something coming down from the state that was going into effect in, is it 2025?
2026.
2026? Can you explain that to me one more time, please?
It's their name is now, it's the Minnesota Paid Leave.
Okay?
It's very similar to the federal law of FMLA, but different. There are 13 states in the United States that have paid leave. I don't know if Minnesota's the 13th or the 13th other, but whatnot.
Okay.
It's going to be, as of January 1, 26, there will be a tax. That tax will have to be negotiated with unions. I think they haven't set on the percentage of it, and it was like, I think like a 0.08% tax, and I could be wrong on that.
So it's a set aside much like unemployment
Yep.
insurance, except
Yep.
how this is split between the employee and the employer has not been identified.
In the law, it can be 50/50. I had an HR Central Minnesota group a couple weeks ago. That county is currently in negotiations with their law enforcement, and it's like, you pay it out. We're not paying it. And that's what's gonna happen, in our negotiations at the table for 2026, is that will be a topic as well too. Then, as Jeff is saying, how the state of Minnesota is running it is through basically the unemployment division of the state of Minnesota. Their end of October, they're going to take our data of wages through that unemployment site, and then they're using that portal at least for that information. And then that's where it'll be another portal, but basically through unemployment. And that's where then that tax money will go in. Elected officials are exempt because you're not employees. Basically, state of Minnesota, every employer is affected.
Doesn't matter their size.
Nope, nope. I know Chamber of Commerce's are doing mass education to employers, private sector employers. And then basically the law is, like I said again, very similar to the federal law of FMLA. They can have a total, in a calendar year, they could have a total of 20 weeks. 12 weeks could be for them personally, similar to all their medical information, to determine whether they're going to get this paid leave, then we are finally notified then as an employer that employee A is approved for paid leave, they're gonna be out for 12 weeks. Paid. Pay them.
And so they're not looking at, you know, like this department that has 12 people out on FMLA and only 2 there to do the work. That's not really a consideration, is it? It's just the,
And that, I mean, that can happen, it is happening now with the FMLA. The only difference is those employees then, if they don't have any time on the books, because our policy is you have to use accrued earned time, PTO. Some union contracts have some language, like Human Services does, they can leave so many hours on the books, which they negotiated in their union contract, so they don't exhaust it all. But currently under FMLA and our policy that they have to use their accrued time, well, if their accrued time is gone, FMLA, we're required to pay our portion of the health insurance. But then if they have no time in the books, they go unpaid. Well, this Minnesota paid leave, they're now gonna get paid.
and so the FMLA won't be on top of this.
No, you can run in concurrent.
Did they finally make exclusions for essential workers too?
That is under the, then you're mixing, then now you're talking the earned sick
Earned
and
sick
safe
and
time,
safe.
the ESST. They changed that law provision that there can be exclusions of essential workers. So, yeah.
But that, if we have equal or better, because we don't have to apply that here because we already have.
Yeah, we're applying it for people, it's running concurrently for people who are, say, full-time with PTO, but people are, temporary parks workers receive ESST time this summer.
Right, and you have to keep track of. So essentially in 2026, along with vacation days, or a PTO time, plus paid holidays, a person could be out of work for at least half a year.
Is there a limit to how often they can apply for it like there is FMLA?
It's just the limit is the number. You can have a max of the 20 weeks.
But is there like, can you apply for it every year?
Yeah, I would assume.
And so if I remember right, the earned safe and sick time, it didn't have to be a blood relative to take that time off, and so that criteria is the same here?
I don't remember exactly, but yeah, there's expanded,
Okay.
relationships, and they are laid out, but I don't have them off the top of my head.
Okay.
Yeah, it's, it will be very, very interesting, difficult or whatnot, is how are you gonna keep getting the work done? Totally understand the concept of, what they want to try to achieve in that respect, but how are we gonna, like I say, you can't just replace a social worker for 20 weeks and think that you're just gonna call in a temp and say, hey, here, do this work. You can't. And, a social worker is only one example of the specificity of the work that, government does. We
Thank
have
you.
to report our wages in end of October of this year, we're reporting in wages. And they've talked, it's already a default. There's so much money that it's been allotted to this, but it's already.
Yeah, it doesn't even-
It's in the hole.
yeah.
Hey, I mean, you could see an example of what happens if a couple employees in Kay's office in the middle of election are on FMLA.
Oh, yeah.
Mhm.
What are you gonna do?
Or paid leave. Yeah.
Problem.
I know.
You just can't go out and pull somebody out of the trees and know what they're doing. It could be a real mess for small business.
And that's where I know that, because the state is doing programs as well too. And then I also got a friend who works at the Chamber of Commerce in Brainerd, and they're doing a lot of education to employers about this.
So hypothetically, could this be repealed at the next legislative session if it was so desired?
Sure.
Yeah, hypothetically, statutes can change.
We can only hope.
Lots of things can be repealed if you got enough.
Yeah, but
Mm.
sometimes things are written in such a way they can't be repealed.
But what makes it difficult is the more people get used to something.
I know.
The harder it is to change it.
Yes.
You personally can repeal it tomorrow. All you gotta do is walk
Yeah. Yeah.
so far.
Yeah. Any other questions for Gina before we move on to the next policy? Thank you. This just came up yesterday at MRC, and some of this stuff is confusing to try to keep straight.
Oh, yeah, I can say, it's so
A lot of
simple
stuff too
and a lot of
fast.
LA that it's just like,
The last one's really brief. We had a conversation at our last communications meeting and just trying to pull some people together. We had Christopher Haar is new over at the solid waste department. And the biggest thing that we're talking about in here is county policies related to the use of social media. So we kind of took some other, really like this font. We got to use this font in all of our policies. So we have a communication team, we have kind of a public information officer. We're gonna review a good portion of this communications with our emergency manager, because these should really tie together. But I'm getting down here to the county website and how we're managing information on that. And then the social media policy is really the part that I want to identify. This is drafted from, I think this came from Stearns County, so they're using a bunch of stuff that we're probably not gonna use at this point in time. But here's a list of common policies. So if you have an exposure on social media, you've gotta acknowledge or manage or whatever the comments that you're getting on posts. And this piece starts with anonymous commenting not permitted. You're responsible for comments submitted under your username. And here's a list of things where we may edit, refuse, or remove comments. And if you have reflections or comments about it now, we can certainly do that. But you have to have something in place. You know, if you have off-topic comments that, you know, they're about a post, but they're not off-topic, then how they should respond. And then I believe we also reference, or we're planning on referencing, not only this is the social media policy, but we'll have an application. So if some department says, we want to have a Facebook page, well, then they're gonna kind of internally create a contract that says, we intend to post once a week, or we intend to post, you know, twice a week, and we want to post them on these areas, and we're going to use it for this purpose. We're going to try to catch up with the ones that have already got that. The way social media works is if you are consistent, if you post twice a week, you create an algorithm that gets out to people, and you can be impactful. If it's once a week, that's fine. If it's like 5 times this week and not again for 6 months, you don't get any bang for the buck, right? So you kind of got to work with that and be consistent. And if you do not have the capacity to develop content, there's not much point in having a social media, you know, outlet. So we just kind of want to catch up to this a little bit, make sure that it's being used for I got a call from the consultant doing the Safe Roads study for the Highway Department, or for MnDOT, and he said, what social media platforms do you have? And I'm like, we don't have any that have a real following. I mean, the sheriff's office puts some stuff out, but I don't know that we have any that would actually have a following of more than 100 people, so I don't know we have any way of helping you. You can advertise them out there, but you can't say that they're gonna have much of an impact. And I'm really okay with that. I'm not terribly interested in putting a whole lot more on social media, but eventually we're gonna have to make that decision. So this is just kind of getting us down that road of, if we're gonna do that, we're gonna try to be consistent when we do it, and ask that whatever departments do that, have identify content managers, not hire content managers, to be able to make sure that that's happening. So this is just really, this one's really informational and under development. It won't come back to you again until I have a chance to review it with the Emergency Management Office.
I play it safe and I'm not on social media.
Just think how much more time we have in our day.
Yeah, I'm surprised too, the number of people that have contacted me, even come to where I work. You know, and then in the conversation, they're like, are you on Facebook? And I say, no, and they say, well, we looked for you, and it's like, good. You know, I like my privacy as a public official.
Oh, you got privacy?
Yeah. Used to.
Yeah.
I remember what that was like.
Is there anything else for the board?
No, so I sent an email out just before the board meeting with a revised copy of the levy summary and an electronic copy of the budget as I ran it this morning. There's a few more modifications, but you'll notice that when you look at that the preliminary levy, the levy request has already dropped to 5.9%. And we've made up that difference. I think we get $17,000 to go to have a fully balanced budget in the general fund. So I would consider it to be balanced at this point. If you want a hard copy of that 129-page report, let us know and we'll get one printed off for you. Otherwise, you all have an electronic copy in your email box.
But that budget has the 1.9% in it. That draft of the budget. that's
The
that's
one-page
5.
levy summary is showing 5.9% for the levy increase.
But then the whole budget, the real long one, that's got the 5.9 written.
Yep, that's reflective of all the adjustments.
Okay.
Yep. And I went through and we made adjustments in, I could give you a list of where we made them, but I cut 10,000 here and there. We made the adjustment to the ECPN expectation. We adjusted some of our interest earnings expectations. I could send you a list of where we made adjustments so you can look for them and not have to play hide and seek in the 129 pages.
Oh, that would be nice.
Yes, thank you.
I have my copy with the markup on it, so I can just identify lines that were changed. I still have some, I had a conversation with Fred in IT, and I said, can we review some of these, or can you show me, the list of inventory that we're gonna be purchasing, and he said, yeah, I can, but we haven't, so I mean, I know we have room there as well, but if we don't need it, we don't need it, just to allow some flexibility there. But yes, I will, I'll summarize the changes that I submitted for that, and that'll make it easier for you to see them. But we ducked under 6, down to 5.9. So I think it's 21,414 would be the new levy. But you have that. Last announcement is the,
Were you able to do that without affecting the fund balance?
yes, yep. The north parcel, the sale, the RFP that we did, the first person failed to execute the development agreement. So we are having conversations with the other person who submitted an RFP, and I should have that for you next week at the board meeting.
That's what I was kind of wondering, was if we would resubmit or re-ask for an RFP, or?
Mary and I sat down with the second proposer and really felt that they had a solid proposal. They just didn't write it very well. So I asked them to rewrite that so we could come up with a development agreement. And when you get your agenda next week, you'll see that I think that they have submitted a decent proposal, and that it's a good use of that property without going out for a full process. Again, I don't know that we'd get any better result.
Yeah, that's I could think of a couple of companies I was hoping would submit, but since they didn't the first time.
And nobody's expressed interest since then either, so I've got a, like I said, I've got a draft development agreement I have to share with that proposer, and then hope to have that on the agenda for next week.
Today from 12 to 1 at Northwoods Bank, Hubbard and Prevention is hosting a coffee talk. Dr. Ken Winters will be the speaker, and he's going to be talking about cannabis legislation related to health issues. Okay, motion to adjourn?
So moved.
Okay,
Second.
okay. All in favor?
Aye.
Motion carried.